Today on the Blockchain Report, Bitcoin's at 107K. Michael Saylor says it's headed to 13 million because apparently compound interest is now a religion. The Bitcoin family just went full crypto survivalist, hiding seed phrases around the world like Satoshi's Horcruxes, and BlackBerry, yeah, that BlackBerry, is suing Bitcoin miners for using math because selling phones didn't quite work out. All that plus quantum FUD, patent trolls, and more financial weirdness right now on today's show. Let's go! Gotta get him anticipating the report. Good morning and happy Monday, my DeFi curious degenerates, and welcome back to another glorious week of financial mayhem here at the Blockchain Report. I'm your host, Hank Hudson, coming to you live from San Francisco, where brunch costs more than your first car, the robots have right-of-way, and someone tried to tokenize the street performers' vibes on Solana. Now, before we dive headfirst into this week's regulatory roulette and altcoin astrology, do the algorithm a favor and slap that like button like it just called Bitcoin a scam at Thanksgiving dinner, and make sure you're following RoxomTV and hanging out with me at Hank at RoxomTV across TikTok, YouTube, Instagram, and X, where market chaos, token drama, and unsolicited airdrops collide like it's 2021 all over again. It's Monday, which means your coffee's not working, your to-do list already hates you, and let's be honest, I'm probably the most stable thing in your portfolio right now. So take a sip of your overpriced adaptogen sludge, breathe through the FOMO, and embrace the volatility, because today's stories are juicier than whatever SBF is leaking to the press this week. But before we dive into the circus, let's check the numbers this morning with our market rundown. All right, it's Monday, and let's see if the market gods are being kind to us, and they are looking okay. All right, happy tidings on the start to our week. Right now, Bitcoin at $107,600-ish, not bad. If you watched our Bitcoin price talk last Friday afternoon at all, you know I was thinking there'd be some profit taking this past weekend. I thought we'd be beneath 100K, but right now, the financial gods are proving me incorrect, and I'm here for it. Right now, Bitcoin's sitting pretty, up almost 2% in the last 24 hours. Why is that? Maybe it's because of that MicroStrategy buy. We'll be talking about that in a bit, so stay tuned. Ethereum doing what Ethereum does, and that's a whole lot of nothing. Hanging around $2,500 a pop, not a lot of change there. XRP's down 0.5% this morning. Cardano's sitting at exactly 67 cents a coin, and Dogecoin is waiting for Elon to do anything, hanging out at around 18 cents a pop. In TradFi, let's see how the stonks are shaping up this morning, and it looks okay. Not a lot happening. Right now, the Dow Jones is down 95 total points. That's basically nothing. The NASDAQ Composite's up 0.4%. The S&P is up $5, so not a lot happening this morning. Sometimes calm and quiet is good, so we'll embrace it here on this Monday. MicroStrategy, though, they are responding positively to their latest purchase of Bitcoin, over 1,000. We'll be talking about that in a bit, but they're up almost $9 this morning. Tesla sitting tight at around 295, been hovering around that 300 mark since our drawback last week after that whole Trump-Elon fallout. That was wild. Coinbase up $2. Nvidia is up almost 2% this morning. And GameStop is hovering right beneath that $30 mark. We're going to be back in just a second. We're bringing my good friend and resident chart shark, Luca Pagano. He's going to help make sense of the numbers for us. So stay tuned. We'll be back with him and more right after this. All right, welcome back. It's time for this morning's Bull Run, where we cover the top stories of the day. Luca will be joining us in just a bit, but in the meantime, we're talking about Michael Saylor. He's back like he never left us, because he did. He's like our orange-pilled angel watching over us. And like every other time he opens his mouth, he's either buying more Bitcoin. There he is. Hey, Mike. He's either buying more Bitcoin or convincing you to. Let's start with the big one. Saylor is now doubling down on his already insane $13 million Bitcoin forecast, as in last July, he predicted BTC would compound at a 29% annual rate for 21 years. That'd take us from 65K at the time to 13 million by 2045. Now, with Bitcoin over 100K, he says he's even more bullish and sees 30% annual growth as totally reasonable. And this isn't hopium either here, gang. He points to regulatory clarity, like the US officially calling Bitcoin a commodity, new fair value accounting rules, and the green light for banks to custody Bitcoin. Add to that tight supply. Only 450 new Bitcoins are mined daily. That's about $50 million in daily issuance. And ETFs and corporations are gobbling all up. According to Saylor, over 100 public companies now hold Bitcoin on their balance sheet, and more are joining every single week. Strategy now holds almost 581,000 in BTC, and that's more than the United States and China combined, and about 12 times more than the second largest holder, Marathon Digital. And they're still stacking, baby. Between June 2nd and June 8th, Strategy sold over $112 million in preferred stock, split between Strike and STRF, and used the proceeds to buy another 1,045 Bitcoin at an average price of $105,426. That brings their total holdings to 582,000 BTC, worth over $62 billion. So I forgot to bring it before, but I'd like to bring it up now, guys. Can we bring up BitcoinTreasuries.net really quick? Camera 3? Beautiful. So guys, what we're going to show you here, this is BitcoinTreasuries.net. This is the #1 place on all the interwebs to find out what public companies are holding Bitcoin and how much. So if you scroll down right now to MicroStrategy, they are the top of the leaderboard right now. They normally update this daily. It looks like it hasn't been updated quite yet. Right now it says their current Bitcoin holdings are about 500 and, oh, maybe they did. It's almost 581,000, so they're close, but keep an eye on that. It also has their average cost per Bitcoin. So they're paying on average about 70 grand per Bitcoin over the timeline of their Bitcoin purchases. Like their most recent one, mind you, is around $105,000 per BTC. Now, with that being said, their profit loss on these Bitcoin, it's a cool 54% in the green, so Michael Saylor is kind of feeling and looking like a bit of a genius right now. And what's really great is you can scroll down on this page here, and you can even see 386, where their share price is at, and how much of their market cap is actually attributed to Bitcoin. So right now, that's over 58% of all of MicroStrategy's market cap is attributed to their gains in Bitcoin. So pretty wild. BitcoinTreasuries.net. Make sure to check this site out. It's really helpful and useful. One of my favorites. Let's go back to camera 1 here, gang. There we go. So, and if this wasn't enough Bitcoin culture for you guys and gals, Saylor also put his iconic orange tie up for sale for 80 bucks in BTC, because nothing says conviction like turning your neckwear into a nod up to the blockchain. So how are they funding this new hoard, you ask? Oh, with a cool $1 billion preferred stock sale. They announced they're offering 11.76 million shares at $85 a pop. Now, these pay a 10% dividend, which is great for institutions who want yield and exposure to Bitcoin. And yes, they're using the proceeds to buy more Bitcoin, because of course they are. Now, Saylor even teased it with a cryptic send more orange post on X, which in Saylor speak is basically a press release. If Strategy follows through on this, this would be their 9th consecutive weekly Bitcoin buy. And they're already up, like I mentioned previously, over 50%, and that's around $20 billion in unrealized gains. Now, there's been some noise about quantum computing amidst all of this. So BlackRock called it a threat to crypto. But Saylor, well, he's not exactly sweating it. He says that quantum fears are mostly marketing from people trying to sell you the next quantum yo-yo token. His logic, if quantum computers break encryption, that's not just bad for Bitcoin, it pretty much nukes like the entire internet. So yeah, Google and Microsoft probably won't be rolling that out anytime soon. And even if they did, Bitcoin is a protocol. The software, it can be upgraded. There are already draft proposals for quantum secure wallets, and Saylor says phishing attacks are a bigger threat than quantum. And he's not exactly wrong. I mean, most people lose their Bitcoin by being dumb, not because someone at MIT crapped elliptic curve math. So, to recap here, Saylor, he's still very much buying, still very much preaching, and still very much treating Bitcoin like it's the Ark of the Covenant. And if he's right, and Bitcoin hits even a fraction of that $13 million price target, then the next bull run isn't a run, it's a sprint to financial escape velocity. And in other news, Gemini, the crypto exchange founded by everyone's favorite Facebook villains, the Winklevi twins, has officially filed confidential paperwork with the SEC to go public. That's right. The twins are trying to IPO their way into financial legitimacy. And nothing says we're serious like calling your company Gemini Space Station Inc. Now, we don't know the valuation or the size of the offering just yet, but we do know they've tapped Goldman Sachs and Citigroup as their financial advisors, which means they're going full TradFi for this one. And the timing, well, it's pretty perfect. You see, Circle, the stablecoin issuer, they just went public. It launched at $31 a share and then popped to $83 on day one, and is now trading around, I think, like 113 or something. So yeah, Wall Street's appetite for crypto IPOs is apparently hungrier than ever. Gemini, of course, has been through its share of drama. They settled that $5 million case with the CFTC. The SEC dropped its investigation earlier this year, and now they're gearing up for their next act, becoming the next Coinbase. Now, if this IPO actually happens, it'll mark another milestone in crypto's quest to be taken seriously by traditional finance. And with Bitcoin hovering above 100K, the Winklevi could be ringing the opening bell at the New York Stock Exchange while the rest of us refresh CoinGecko like it's Fantasy Football Friday. And the Taihutu family, better known as the Bitcoin family, much easier to say, has officially gone off the grid. And no, that's not just influencer clickbait. They're now hiding their crypto seed phrases across 4 continents because apparently being all in on Bitcoin makes you a walking ledger with a target on your back. Now, did the Taihutu family's patriarch, he's saying that they've abandoned hardware wallets entirely, but why, you ask? Well, because of repeated kidnapping threats. Instead, they've moved to a hybrid system. Some of parts of their seed phrases are now etched onto fireproof steel plates and hidden in undisclosed locations across the globe. That sounds fun. Now, others are encrypted and stored using blockchain-based services. And even if someone holds Diddy at gunpoint, he's the dad, he says they only get access to a little bit or whatever's on his phone wallet at that time. The rest of it scattered like Horcruxes across the world. Now, they've even stopped sharing real-time YouTube updates of their travels because of all of this, because, apparently being crypto famous now comes with more risk than reward, especially when strangers can reverse engineer your Airbnb from the reflection in your sunglasses. Now, about 65% of their crypto is in cold storage. The rest is in multi-sig wallets or decentralized exchanges for daily spending. They don't trust centralized vaults because, and I quote, "What happens if one of those companies goes bankrupt?" And to be fair, that's a good question. I mean, ask anyone who thought Celsius was a safe place to earn yield. Meanwhile, demand for private security is spiking. Crypto execs in Europe, especially in France, are hiring full-time bodyguards. One crypto millionaire's father was brutally attacked. A tourist in New York was tortured for 2 weeks by kidnappers trying to get his seed phrase. And Moroccan police just arrested someone for kidnapping crypto execs. So, yeah, if you're holding a lot of Bitcoin and broadcasting it like a Flex Friday, maybe you want to reconsider. Cold storage is king, though, and operational security apparently is the new Rolex. So we're going to take a quick break, but before we do, we're going to have Luca Pagano, our resident chart shark, helping us read the charts as soon as we return. And in a wild story, Bitcoin miners are being sued by cryptography patents from BlackBerry. It's wild, it's weird, it's the Blockchain Report. We'll be right back with more after this break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
And we're back with this morning's bull run. Bitcoin miners, they are under attack, but not from regulators, energy lobbyists, or the ghost of Jamie Dimon just yet. This time, it's by BlackBerry patents. Okay. The company whose last major contribution to society was BBM is now indirectly trying to kidnap Bitcoin miners. Here's how we got here. A company called Maliki Innovations, which sounds like a villain-run VC fund, bought up 32,000 non-core patents from BlackBerry back in 2023. Now, they've set their sights on Marathon Digital and Core Scientific, suing them for allegedly violating patents related to elliptic curve cryptography, or ECC, which, for those of you not fluent in math nerd, is one of the core cryptographic techniques Bitcoin uses to verify transactions securely. Now, according to Maliki, this groundbreaking cryptographic work was theirs all along, and Bitcoin miners owe them cash for using it. Never mind that the ECC has been around since the 1980s. Never mind that Bitcoin is open source, and never mind that this tech has been baked into the protocol since Satoshi was still an enigma with a Hotmail address. Now, this lawsuit is less about justice and more about settlement roulette, a common strategy used by what lawyers affectionately refer to as patent trolls. There's one of those little monsters, because as it turns out, suing broke individuals with a few sats and cold storage is not a particularly lucrative business. But publicly traded Bitcoin miners, a much tastier target. Crypto attorney Aaron Brogan said individual users are likely safe since most are what he calls judgment-proof, which is legalese for not worth suing. But the big miners, they've got war chests and stock tickers, which means this could get expensive. Now, if Maliki somehow wins, they could recover up to 6 years of royalties. And that's a number so big, it might push some of these miners into bankruptcy. And in the worst case scenario, Maliki could try to go after all US-based miners, which according to Brogan could undermine the security of the Bitcoin network. But before you hurl your ledger into the sea, a few things to remember here. One, legal experts say this case is likely pretty weak. Most of these patents are either expired, narrow in scope, or cover implementation details that don't actually apply to how Bitcoin uses ECCs. Now, two, even if infringement is found, there's a second trial to decide if using open source code is actually a violation at all. And three, Maliki probably doesn't even want a trial. They just want to check. Now, crypto attorney Michael Bassina noted that this is classic patent troll behavior. Sue, make some noise, scare people, and cash out before anything actually hits a judge. But there is one upside here. If ECC is now being recognized as valuable IP, maybe it's finally time Wall Street admits Bitcoin is more than tulips and hopium. And while Maliki might be sniffing for a payday, this lawsuit is certainly a reminder that when you build something that threatens the status quo, the old guard doesn't innovate, they litigate. Long live open source, long live Bitcoin, and somebody tell BlackBerry to stay in their lane. No one's using your phone, and now no one's buying this either. And Taiwan-based crypto exchange BitPro, they lost $11.5 million in the most recent hack they experienced, and then they said nothing about it. And for weeks, they continued to say nothing about it. The breach took place just last month when hot wallets on Ethereum, Tron, Solana, and Polygon were drained. The funds were moved into DEXs and then either run through Tornado Cash or bridged via Thorchain. Basically, classic hacker laundering routes all the way through. Now, the first to notice this, blockchain sleuth Zach XBT. He posted about it. And according to him, BitPro didn't alert users via X or Telegram for weeks. Instead, they announced a maintenance period. Withdrawals were reportedly affected, especially USDT. Then did BitPro confirm the exploit? Now, in a Telegram post, they said the incident occurred during a wallet upgrade when an attacker exploited an old hot wallet while funds were being moved internally. They now say user withdrawals are completely unaffected and that the platform has sufficient virtual asset reserves. Now, all trading functions stayed online throughout, though they've also hired a third-party security firm to trace the stolen funds. They've even promised to share their new hot wallet address soon, in case anyone still trusts them. Now, this isn't an isolated event either. DeFi and exchange exploits keep on growing. Cetus, a DEX, was hit for $220 million on May 22nd, although $162 million of that was later recovered. And on June 2nd, Nervos lost $3 million. Those funds were swapped to ETH and sent through Tornado Cash as well. Now, Cyver's alerts posted that Nervos has paused all contracts and is investigating, and blockchain security firm Hacken said that Nervos exploit took over 6 hours and multiple failed attempts. Their conclusion from all this? Access control failures are now one of the most critical threats in Web3. They say their tool, Extractor, was designed to catch this exact kind of issue in real time. But it clearly didn't help BitPro or Nervos or Cetus. Decentralized finance remains an absolute hacker buffet, and the house keeps leaving the back door open, as we've seen and will probably see again in the not too distant future. And Marathon Digital, we mentioned them earlier, they're now operating under the ticker MARA, mined 950 Bitcoin this past May, and that's more than $101 million worth of BTC added to their books. And they didn't sell any of it, not a single sat. That move bumps their total reserves up to 49,179 BTC, making them the second largest publicly traded Bitcoin treasury in the world, behind Strategy. Because, of course, Strategy's number one, as we know. We can actually bring up Bitcoin treasuries again one more time, guys. You guys got it? Beautiful. So if you take a peek here, again, we can go to bitcointreasuries.net, the number one place to see where all the Bitcoin is being held by publicly traded companies. And that number, my friends, keeps on growing. So this website keeps becoming a little more important. If we scroll down, you'll see number two, we have Mara Holdings. You click on them again, we see that right now they have over 49,000 BTC in their balance books. Their market cap, 5.5 bill. Their share price right now up to nearly 16 bucks, or say it's about 15.60 at the current value. And their BTC market cap, 97%. You see these guys buy and they hold and they mine and then they hold again. That's all they pretty much do. So again, bitcointreasuries.net, best place to check out publicly held Bitcoin funds for all your favorite public companies. Let's go back to camera one here, gang. Now, the May haul by Mara represented a 35% increase in mining output from previous months, specifically compared to April. It was also a record-setting month in terms of block wins. We're talking 282 total blocks, which is a 38% jump from the month prior, and the most Mara has secured since the 2024 halving. Now, it's not quite their all-time high. That title still belongs to December of 2023 when they mined over 1,800 BTC, but considering the post-halving landscape, it's a pretty strong flex. Like many mining firms, Mara's been looking to diversify lately, especially after the 2024 reward cut / mining revenue across the board. Their approach to all this, AI infrastructure. Because apparently, if you're not pivoting to AI in 2025, you're in the wrong business presentation, my friends. In March, Mara announced plans to sell up to $2 billion in stock to fund their expansion, including doubling down on mining operations and stacking even more Bitcoin. They also partnered with SEC registration Bitcoin investment advisor 2 Prime to deploy 500 BTC in a yield-generating strategy. Because if you're going to hold that much Bitcoin, you might as well make it work a little over time. Now on the financial side, Q1 revenue came up at $214 million. That's up about $50 million year over year, but the headline comes with a catch. There was a net loss of $533 million for the quarter. So yes, they're printing Bitcoin, but they're also burning through cash. Still, some analysts are bullish. Mara stock is trading above 15 bucks and up over 5% over the last week. It's still down nearly 13% on the year, but optimism remains supreme. Now, some rating agencies have marked it as an outperform, with projections suggesting it could more than double in value over the next 12 months. Regardless of where the stock goes, the on-chain message is loud and clear. Mara is accumulating Bitcoin, not flipping it, not dumping it, not hedging with meme tokens. They're playing long ball here, and every time they hold instead of sell, it takes potential sell pressure off the market, reinforcing price support and strengthening Bitcoin's scarcity thesis. This isn't hopium, my friends. It's hash rate back conviction. And in a market full of noise, Mara's strategy is refreshingly silent. No drama, no gimmicks, just 950 new BTC sitting quietly in cold storage, daring the markets to blink first. And MoonPay has officially gone full-on Pokemon. They've now got all 50 states. They caught them all. And the crypto payments company announced it's received both BitLicense and a money transmitter license from the New York State Department of Financial Services, which means for the first time, MoonPay can operate in every single U.S. state, including the one that's been acting like crypto is a controlled substance, and we're talking about New York. Now, co-founder and CEO Ivan Soto-Wright called it the golden regulatory stack, which sounds kind of like a delicious sandwich, but in crypto terms, it means they've now got permission to play in every single sandbox. The BitLicense is basically the bouncer badge of New York crypto, and only 35 companies have one. The list includes Coinbase, Gemini, Circle, and now MoonPay. So what does MoonPay actually do, you ask? Well, they make it easier for normies to buy crypto with credit cards. No seed phrase required. No hardware wallets to sweat. That's either a killer onboarding funnel for adoption or a great way for boomers to buy Bitcoin at the top and get mad at their nephews. Sorry, Grandpa. Now, here's where things get a little spicy. Even though MoonPay finally cracked the BitLicense, the license itself is under fire. In fact, New York City Mayor Eric Adams said during the Bitcoin 2025 conference in Vegas that the BitLicense should be scraped entirely, which is kind of like getting into Harvard the same week they announce it's too elitist to exist. Now, in fairness, Adams has been cozying up to crypto recently. In fact, he's hosted summits, made keynote appearances, and is desperately trying to make New York feel like less of a financial DMV. So the timing of this approval is interesting, especially considering Genesis Global Trading had to surrender their BitLicense earlier this year as part of a settlement with NYDFs over allegedly defrauding investors. But MoonPay isn't Genesis. They're not running shady yield farms or suing the Winklevi. They're trying to make it easy to buy coins without needing a PhD in gas fees. And now they've got the legal blessing to do it in all 50 states, plus they're opening a New York headquarters, signaling they're not afraid of subway rats or regulators. They've also recently locked in crypto business status under the European Union's MiCA framework, which means they're pretty much compliant on both sides of the Atlantic. So what does this mean for Bitcoin, you ask? Well, it's pretty simple. The more compliant, licensed on-ramps we have, especially those that don't rug you mid-purchase, the easier it is for Main Street adoption to continue. More users equals more demand, which equals more potential upward pressure, especially if MoonPay helps new users skip the buy altcoins first, regret it later phase. Hated that phase. So while the BitLicense may be controversial for now, MoonPay's got it. And in crypto, being everywhere is half the battle. The other half is not getting fined by Gary Gensler. So we're going to go to break in a second, but make sure to stay tuned because Meta just signed a 20-year nuclear deal to power the robots? Yikes. That sounds scary and you won't want to miss it. Stay tuned. We'll be right back with that and more.
Oh, it's beautiful, Hank. This is not financial advice.
All right, welcome back. Now it's time for my favorite part of every Monday morning. We're joined today by our good friend Luca Pagano, our resident chart shark and crypto wunderkind, help us make sense of this market. Luca, how are you this morning? Happy Monday.
Hey, Hank. Thank you for having me. Everything's going great, man. So happy to be here.
Oh, pleasure is mine. All right, Luca. So last Friday, I don't know if you caught it on the Bitcoin price talk desk that we do here, I thought we might be seeing us drop back beneath 100K. I thought there'd be some profit grabbing, but this morning is telling a very different tale. We're up over 107K again. Things are looking rosy. We mentioned at the end of last week, you thought if we could stay above 106, 107 going into this week, it would be a good signal of things to come. Are you still feeling that way? What are the charts looking like this morning to you?
Yeah, I mean, let's just dive in, because I think Bitcoin has been, very, very good in terms of technical analysis. He's been helping us definitely, because as we talked last week, we saw that deviation onto the highs, remember, and we said, hey, there's a breakdown. We gotta be a little bit careful breaking down to the $106,000. So we foresaw last week a probable pullback into the $100,000, which it beautifully happened. To be honest, the low of last week was $130,000 and like 100 or something like that. So that's very, very nice to see. Now we're definitely pulling back up, pushing a little bit. We should close for us to see some green days. I think we should close above $107,000. Remember, we marked that. So things are going north for now. Let's hope we can keep it up on the end of the day. That will be definitely like very telling.
Absolutely. What do you feel like the catalyst is for this bump back up to 107? Last week, after the whole Elon Trump fallout, we saw us dip almost down below 100K. Then the next day, surged back to 105. I'm wondering, is this recent price surge to over 107, can we attribute this to the upcoming consumer price index reports that we'll be getting later this week? If inflation's not cooling down, obviously a good thing for BTC. Yeah. Could it be because we keep seeing more and more public companies stacking Bitcoin on their treasuries? Strategy just did more today, and every day it seems like a new company is coming out saying they're doing the same. What are you attributing our most recent bullish price action to?
Yeah, I mean, honestly, I think there are two very good sides of the same coin here for the bulls and for the bears. So why do I say this? I mean, I think we're at pretty important weeks upcoming right now, because of the Trump and Elon mania. I think there are honestly good arguments for both, because you can see it as a very pessimist, everything's going to be lit on fire case scenario for the bears, which I think it may make sense in that manner, but also that's always a good area for bounce. That's why we saw this coming into the weekend, because when everyone's trying to, shout at the sky and sell, that probably is a good time to buy. So that's for, the bear and bull case scenario. So looking at the charts, Hank, you have some stuff that you have to be that have to be taken care of, which is tariffs are gonna be important in the upcoming months. So that is for sure something important to see in terms of fundamentals. But also you've got on the other side the bull case, which is companies are definitely realistically becoming Bitcoin treasuries, and that's always important to notice, because that's a shift of a good magnitude in terms of mindset. So that I think is important. So for the coming weeks, I mean, I want to be clear with this. We saw this last week. What are we expecting for next week and upcoming days? For me, that is going to be definitely shown in the chart. So for the bull case, real quick, we got this pretty ugly high in terms of efficiency on the market. When you see a high that has no excess, let's say no weeks, no trapped longs for sake, it usually comes back up to it to test it again. So we should see Bitcoin testing new highs, ideally, for us to confirm either if we're gonna keep on going or if this area is gonna tire again the bulls, right? So that's for me for the bull case. Mm-hmm. For the bear case, for me, if we don't close above $107,000, Hank, for me, this will be a test into the latest resistance, and a continuation onto the lows. I mean, I hope I'm being pretty clear, Hank. I don't know if I'm explaining myself here.
Yeah, no, I think you are. So what are we thinking right now? We're in the second week of June here, Luca, and things are looking pretty good. 107, 108 arena right now. Has this in any way changed your predictions for where you think Bitcoin will be by the end of the month of June?
No, not yet. For me, I'm still on $120,000 if we can close back up $107,000. So, I mean, for me, the next probably hours and a day, maybe, for me, this will define the following weeks. Because for me, structure here is very important, Hank, and we're at a very key level into the last highs, you know? So, we gotta see if Bitcoin can hold this area that was last resistance, or if we want to go to lower to test demand again. You know, that's for me key.
Gotcha. So we got to hold that 107 level right there. So what is our new? What do you feel like is our new? Before we let you go, what's the new ceiling that we're trying to break through, and what's the floor that we can depend on if we see some resistance?
Yeah. For me, ceiling is where we're at right now. So $107,000. If we can keep up tonight around that area, we should be looking at least for $112,000, $113,000 for me. If we don't happen to hold this tonight, I think we will be seeing again $97,000, probably some of that.
Okay, well, either way, I'm sure Michael Saylor approves. It's either a buying strategy or just proving his conviction a little bit more. Luca, as always, we certainly appreciate and love having you here on the Blockchain Report. Really quick, it's early in the week, and I know everybody out there wants to work along with you and see what you're predicting and seeing in the charts. Where can I send them?
Well, we will see if we have some update tomorrow at Luca at Roxom, Hank. Thank you very much for having me, as always.
Love it. Oh, pleasure's mine. Thanks, Luca. All right, gang, we're going to take a quick break, and we're going to be back with bullish, bearish, or BS to wrap up today's show and see if things are looking good, bad, or otherwise for the price of BTC. All right, before we get into the wrap of today's show, first we got a little socially awkward for you, and it's all because of Meta, and they're going full nuclear. Literally. The company behind Facebook and Instagram signed a 20-year deal with Constellation Energy to power its AI and tech infrastructure with nuclear energy. The agreement will expand output at the Clinton Clean Energy Center in my home state of Illinois, a plant that was supposed to shut down in 2017 due to financial issues. Illinois' Future Energy Jobs Act saved the plant with zero emissions credit, but those will expire in 2027. That's when the Meta deal kicks in. This deal will increase the plant's output by 30 megawatts and keep 1,100 jobs and $13.5 million in annual tax revenue on the books. Now, why nuclear energy, you ask? Well, because AI sucks up an absurd amount of power, and Meta wants to keep its data centers running while minimizing emissions. They emphasize their commitment to 100% clean and renewable energy and emergent energy technologies. This also comes as Meta is doubling its AI spend this year, and the company is framing the move as part of a broader push to keep aging nuclear plants online, rather than letting them close and scrambling to build replacements. Now, Constellation's not new to this game either. They signed a similar deal with Microsoft to power their data centers with energy from 3 Mile Island, starting in 2028. Google, meanwhile, made a deal with Kairos Power for a small modular set of nuclear reactors, and Amazon's been scooping up investments in next-gen nuclear too. Because apparently, when the AI apocalypse comes, it'll be powered by the quiet hum of clean fission. All right, we're going to wrap up today's show with a little bullish, bearish, or BS. Can we play the stinger? All right, this is the part of the show where we diagnose the top 5 stories of the day and tell you if they're pumping our bags or wasting our time. Our first story, mind you, was Michael Saylor's doubling down. He's saying Bitcoin will compound 30% annually for the next 21 years, hitting $13 million a coin around 2045. And he's backing it up with regulatory clarity, ETF demand, and another $1 billion stock raise to buy more BTC. I mean, this is bullish, gang. When one of the biggest institutional whales is still buying and calling for moon math, it's not hopium, it's demand. More corporate balance sheets plus tighter supply equals long-term upward pressure, or in other words, Saylor stacking and preaching, and that, my friends, is always bullish. Next up, we have the Winklevi are trying to bring Gemini to Wall Street with a full TradFi glow-up. They filed confidentially, hired big banks, and are chasing Circle's moonshot IPO. Verdict on this one is I'm bullish too, gang. I mean, a successful IPO would signal that traditional finance is back to flirting with crypto, and this time they might actually call us the next day. It boosts legitimacy and adds more liquidity to the space. I mean, Gemini going public is bullish. Even if they don't twin-splain it to death first. So Winklevi, Gemini bullish. We're up to two bullish to start. This is a hot start. Let's see what we got next. Next, the Tahutu clan is hiding their seed phrases on 4 continents and ditching hardware wallets after facing kidnapping threats. They're treating Bitcoin like a Bond movie minus, the whole Aston Martin. The verdict on this one, feels a little BS. I mean, good for their operational security, but this has zero impact on price unless their steel plates are engraved with Saylor's next buy order. This is just lifestyle content. The first family of Bitcoin, they make for a great documentary, but it's not really moving the market. I'm calling BS on this. Next, we have a company holding old BlackBerry patents is suing major miners over elliptic curve cryptography, the core tech in Bitcoin security. It's a classic patent troll shakedown. My verdict on this is bearish, though. I mean, if this gains traction, it could create costly legal headaches for US-based miners everywhere and disrupt the hash rate. I mean, miners under legal fire are less likely to expand, and that could weaken network strength in the short term. Or in other words, BlackBerry's back, and it's to ruin things. I'm bearish on this. So right now, 2 bullish, 1 bearish, 1 BS. Moving on to 5. Last, we have bit license, or MoonPay gets New York bit license, which means they can now operate in all 50 states. They now hold that elusive NYC license, which officially makes it available nationwide. It's also MiCA compliant in Europe, meaning that MoonPay is now legally allowed to help boomers FOMO from coast to coast. I'm bullish on this. I mean, more licensed on-ramps equals more users. Easier fiat to crypto access means greater adoption, especially from mainstream users who think cold storage means a second fridge. So, more normies equals more buys and more Bitcoin demand. I'm bullish on this. So, final score today. 3 bullish, 1 bearish, 1 BS. I mean, listen, gang. Saylor's buying, Gemini's growing, and MoonPay just unlocked the US like it's a bonus level. I am bullish on today, so grab your party hats and get ready to celebrate, because today is a great start to our week. As always, thank you for tuning into the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and me at Hank and RoxomTV on every platform that hasn't rugged you yet. And I will see all of you degenerates tomorrow for more crypto chaos. As always, thanks for watching. See you mañana. Woo!